Hi, this is Randy Finney with Right Side of the Chart, and today is Monday, June 15th, 2020. What we're going to do in this video is start out with the broad markets. I want to take a look at a few time frames, some developments worth noting, both bullish and bearish. So we still have some crosswinds, a little work to be done, really on both sides, both bulls or bears, to firm up, the outlook for the next, tradable trend. I'm talking, 5-10% plus. So I want to go over that. I think we're the bottom line. I think we're at a pretty critical technical juncture that can determine that next trend, just what happens over the next day or so here, maybe the next couple days. So we'll do that, and then we'll roll into updates on some of the recently highlighted trade ideas. We'll kind of keep focusing on the ones that we've looked at over the past week or two, any that stand out today. So I'm not going to spend 40 minutes talking about 3 dozen different trade ideas, just some of the ones I've highlighted recently that are worth noting, whether they hit a target or they're breaking out or looking good, or time to book profits. Start out here with the broad markets. This is the S&P 500 tracking ETF SPY. We're looking at a daily time frame. To quickly recap what happened, we had those big gap downs that left the island cluster top. Big sell signal took out the 312.81 level, and we came very close today to the 200 exponential moving average, a 200-day. That's the red line. You can see right there, 200 EMA, and it comes in right around that 294.85-ish support. That's a very significant support because that was the top of this multi-week, almost 2-month trading range right here, where the SPY bounced around, then finally broke out, and it led to this strong advance up. So resistance once broken comes support. So when you zoom in tight, you can see the SPY is still a little bit above there. We're right around where these breakout candles occurred. But again, pretty significant support just below. Although I will say we haven't tagged it yet. We didn't hit the 200 or that level, and I'm still favoring more downside here. But again, I'm going to show you some things that are certainly worth watching right now on the charts. Let's look at SPY on the 60-minute chart, and then we'll go to QQQ. On the 60-minute chart, we've been watching. We had this after the breakout of that trading range. We just had the market just run away, gap, series of gaps. Each of those, which I expected at the time and still do to be backfilled. And we already backfilled 2, almost 3 right here. If we would have hit the bottom of that gap's around 295.63. And that would have backfilled it. So we reversed a little shy. I still expect us to get down there, but again, I'm going to show you some things that could foil that. Although as of now, based on everything that I've covered in recent weeks, which I'm not going to go into that now, the divergences, the extreme sentiment indicators, market breadth, all that good stuff kind of plays into my longer term view, and in some cases, which we're going to get to in a minute here, will sometimes override some bullish developments on the shorter term time frames, which I'm going to show you here in a second. What are those bullish developments? Well, we're still on the SPY. I'll show you that the 60-minute chart, we have the PPO coiling up. It's turned back up after heading lower, and the PPO it's flattening out here. It's poised to make a bullish crossover. That's when the blue line, the PPO line, and if you don't have a PPO, use a MACD. It'll be very similar. Use the default settings, 1226.9. When it crosses the signal line, the 9 EMA, which is a 9-period exponential moving average of the PPO line, is what they call the signal line. So when you get the blue line crosses from below, it's a bullish crossover, and when it crosses from above, it's a bearish crossover. And that often signals a trend change, at least on the time frame you're viewing. This is a 60-minute chart, so it signals more of a intermediate term, shorter to intermediate term trend changes, where if you get those crossovers on a weekly chart, that's going to indicate probably a much larger, more significant and lasting trend change. But it's worth noting. And now we're poised to crossover, but number one, we haven't. Sometimes they look like you're gonna get a crossover, and you do get a crossover, and other times, like right here, it looked like it was gonna cross, but it didn't. They kissed. They eventually crossed over, but sometimes those lines touch and kiss, and then you don't get a crossover. In other words, you get a rejection on the attempted crossover, like you did right there. And again there, finally the bullish crossover didn't come to that point. So just something to note. Again, it's we are down below the zero line as well as this. I put a line here at about 0.57 negative, about a half point below the zero line. that seems to do a pretty good job on, as you can see here on SPY, when you go back in time, defining the trend. In other words, when you're above that line, the PPO, it's bullish, and when you're below the line, like right here, it's bearish. See, prices were falling, and above that, leading up to the highs. This was a high in the market, the all-time high in the S&P 500. That was a big drop we had. And so again, pretty good job of defining the trends, and you can see we're clearly below both the zero line and that 0.57. So on that, you give a check mark to the bears. So like I said, mixed signals, and always I'm going to point those out. That's my job. I'll give you my thoughts. If I have strong convictions, I'll tell you. If I have somewhat fair convictions, I'll tell you. You can usually gauge from my voice how confident I am on which scenario is going to play out, and that's the tough part of trading. I mean, first and foremost, you need to recognize things in the charts that might question your current positioning or your current views or bias on the market. That's the key to being a objective trader. Is don't dismiss bullish developments when you're bearish, and vice versa. Now, with that being said, as you see, I can do these videos at any point in time. Just about, I can put a bullish spin or a bearish spin on the charts. That's what we all do, and then we try to support our case. So the tough part of what I'm trying to say is to trying to filter out and determine which bullish signals or technical events to act on and to take, and either go long or close your short positions out, and which ones to ignore, and vice versa, for bearish development. So that's it. We're still in a downtrend, breakdown, impulsive there, and everything I just went over in the 60-minute chart. Those are things to watch out for. Let's look at QQQ. Qs took out today. We took out that blue trend line. We had taken it out Friday intraday, but then reversed and closed back above it. As I always say, when you're trading on a daily time frame, it is the most important thing is how those candles close. So we regained it on Friday. We're below it right now. The day is still young. Anything can happen. That's the first reaction. I'm showing you how that blue trend line came about. So there's 3 more reactions there. That makes 5 reactions, 6 reactions. The bottom of this candle, that little skinny part, the tail or shadow. 7, 8, the body closed right there, and now we're below it. So that puts the Qs in a precarious technical posture right now. They're below trendline support and just above, well, comfortably above for now, this next support here, about 228.68. And again, the day is young, so this is one of many things I'll be watching over the next day or two. Will QQQ regain this trend line? If they do, that's bullish, especially on a solid daily closing basis. And if they keep getting away from it, well, that would be bullish as well. There's still this yellow back trend line if it wants to back test, but first things first, we're under that trend line. Let's see how we close today. I'm very eager to see that. And then will we give back up that 228.68 level? And if we do, what does it look like? Big impulsive break below there, that would be pretty bearish. And I think open the door for maybe a back test of the 200-day moving averages at minimum down here, and that's a pretty big drop. If the Qs were to do that, to probably come in with this support level I have right here. Let me give you that number, about we'll call that 211, and that would be a drop of roughly, depending how and if we even get there, about 9% or so. If we take out this trend line, then your next resistance level on the daily here would be a back test of this yellow trend line there that was taken out last week. So that's what the Qs look like on the daily chart. On the 60-minute chart, we have this blue uptrend line right here. Let me move it so you can see it clearly. This trend line here, we're kind of flirting with it now. We're not really below it, not above it. That's not an impulsive or convincing breakdown, so we're testing it. So here is QQQ hugging on to, trying to hold trendline support, again with price support just below it at 227.80. So the way it works, if we give that up, it'll probably be once, if the Qs are rejected here, break that down, you'll probably see an impulsive quick move down to 227.80, probably get a buyer step in there because that's support, maybe get a bounce, and we'll take it from there. What would a bounce look like? Maybe a back test of the trend line, or if we break below there. Remember, I posted the chart of all the market leading FANG stocks with some levels to watch today. I'm not going to get into those in the video to keep this streamlined, but the more those key support levels, I color coded them in yellow, the more the FANGs that break down, the more likely it is that we're going to get a significant move down. In other words, much more. If they hold support, and they are still above support, all but one, I think, this morning were above support, and only that one was just slightly below. You have to recognize that for what it is. The market leaders haven't broken down, even though a lot of other stocks have recently. All right, now what I want to show you is something on the futures. It's pretty darn interesting, and again, compelling, because this could determine where we go in the near term here. I pointed out last week on Friday that we had some divergences forming, and we were right about here. This is the S&P 500 E-mini futures. And those divergences, we did take a leg down early this morning, but well before the market opened. We hit that pretty big support level there, about 29.41. Remember, that's a level that I've had on this chart for a while as a potential target. Same level. We hit it almost to the button there. Little slightest momentum fueled overshoot, and we reversed. And so what that did is it simply extended these divergences. And these are powerful divergences. Powerful because they're very steep. Look at the steep slope of this trend line here on the indicators, on the RSI up above and the PPO down here. The last time that I had bullish divergence on my 60-minute chart was right here. That divergent low led to this whole thing right here, and that was one of the biggest rallies in years in the market. So something to note. And on face value, it's bullish across the board because we've also taken out. I'm going to tweak this trend line a little right now for you. This is a trend line I've added since last week's video, and I'm going to come in. And what I'm doing there is I'm capturing. Here, I'll zoom in a little tighter for you so you can see it in the video. I'm trying to capture this reaction, all three reactions right here, right there, there, and there. I could tighten that trend line up a bit, but you get the picture. I would say it takes at least 3 reactions to validate a trend line. So we don't yet have a reaction on this one. We're moving up. If we pull back, we'll have one. Maybe they break it out. But again, it's that divergent low, and the fact that it's divergent low off support is compelling. So where am I going with this? Well, this is the onus is on the bulls right now to take this and run. If there are still more buyers in this market than sellers right now, these divergences should play out for a considerable rally. I would say, at least up to, well, I'll tell you, at least up to about 3,100. Why? That's about the measured target for the, if this is a wedge. Again, I don't want to force this trend line right now because we don't have a lot of reactions, but if you take the widest part of a wedge, add that to where the wedge breaks out, that gives your measured target. And then I usually take that measured target and look at the nearest support or resistance level I have. In this case, it's about 3090, we'll call that 3100. We could even say here, each of these levels, they were support and targets on the way down, and they should act as resistance on the way up. I may have to fine tune some of those lines. Sometimes I'll do that if there have been additional reactions since, but this is what I wanted to point out, bullish divergences. Now, we don't have, I'm going to flip over to NQ for a second, and you can see the same thing here. This is the NQ 60-minute chart. Let me zoom in a little bit tighter. And so you can see NQ, and again, these lines have not been added after the fact. They were all here last week. 93.71 was my next target if this 94.84 level was taken out, which it was. Hit that today, and we reversed. And when we did so, we put in a similar falling wedge type pattern. I'm going to tweak this trend line again because I had it this morning. Oh, I just moved that line, so now in the next video I'm not going to have that line where it was. That's the thing about these charts. You got to be real careful where you grab or you move any nearby trend lines when you try to grab. And adjusting these trend lines can be a bit of a pain sometimes. Here we go. There we go. Right there. Okay. So we have a potential trend line as well coming in right here on NQ and price resistance. So I'm going to say this as I'm doing the video right now is an objective time to short. You got to be careful. You're shorting in front of the first big clean and steep divergent low in a while on NQ. Here's the last time I had divergent low marked right there, and from there the NQ rallied. NQ, the Nasdaq 100 futures rallied 14. That line should show about 15%. So do I expect that again? No, especially not that much. But here's where I wanted to go with this. Okay, we do not have the divergences on the 60-minute time frame of the index ETFs. That's what I like to see after a pretty significant correction or downtrend, to start covering shorts and going long. So we don't have it on the 60-minute ETFs like QQQ and SPY. However, we do have it on the futures, and that's worth noting. We have what's a potential trend line here, and it will be confirmed if we get another reaction. I do expect a reaction here because there's both that potential trend line that some traders are probably looking at, and I had a former support, now resistance level here at 96, about 96.50, and you can see it's pretty well defined recently. So therefore, expect a pullback here. Now, what does it look like if we do get a pullback or not? If we punch up through there, well, that's going to be bullish. If each resistance level overhead is taken out, that's bullish. If we pull back, we could regroup. In other words, as long as these divergences remain intact, and we could even take another low and still keep them intact. But if they get burned through, what I mean by that, well, the PPO and the RSI drop down below these previous lows, you'll no longer have negative divergence. And to me, that's a pretty darn bearish thing. If these divergences fail to materialize, fail to play out, then I think you'll see a pretty sharp leg down afterwards. So that's what I'm watching. And again, with the market-leading FANG stocks still above support and bullish divergences on the 60-minute chart, I can and am making a case here for a rally. So like I told you on Friday, I believe, I said, keep things light going into the weekend because we had, all those market-leading FANG stocks still at support. And again, it's just a cross current of mixed technicals. We have the powerful sell signals on the daily charts of all the indexes, and we got a pretty decent correction so far. Don't get me wrong. It's been a nice nice pullback off the top. We've had about a 7.5% drop so far in the NASDAQ 100 futures into this morning's low. It's going to read a little less on QQQ because this low came early in the morning before the market opened, late at night, early in the morning, and we started rallying this morning and have built on that rally. So that's where, again, a futures trader could have milked all that run down, covered here because that was a big support level. Again, not just a random level, it was here before, and that's where we hit. At the same time, we have pretty powerful divergences. So that's what I'm watching. If we break out, you can see the overhead resistance levels. Sometimes you get a breakout, it looks like the real deal, and they start selling into it. And where should it stop if we do break out, if we are going a lot lower? In other words, if the sell signals on the daily chart that we just had last week, if those hold and play out with those island cluster tops as major topping patterns, where should any bounce ideally? And I would say right there about 97.95 on NQ. That's pretty significant resistance. This was also a breakout right here. Here, let me go back a little longer, and I think that's a level that quote unquote should be contained. If that's the case, you can see it. Yeah, you can see it here. I'll go back to 2-month chart. That's probably zoomed too far out for you. 2 months. Yeah, you can even look at it on a monthly. There it is, right here. This line, let me draw it for you. There we go. So again, now if we were to just go down here and continue down lower to this next target, especially if we took out the divergences, that would be quite bearish because again, you see in a bullish trend, remember, despite the fact we're down 7.5% in the last several trading sessions, make no mistake about it, the near-term trend for the last couple months is clearly bullish. So this right now can't be chalked up to anything more than just a corrective wave within a bullish trend. So where kind of going with this is bullish divergences should play out for a significant rally, if not the leg, the catalyst for the next leg higher to take out the previous highs. That's what should happen in a bull trend. If anything less, if these divergences just fail to materialize, we go down low, take them out, then that is pretty darn bearish. So that's what I'm watching. That's what I wanted to point out. And across the board, all the futures have them. This is RTY. Let me just tweak this line a little bit here. These are the divergence lines. RTY are your small cap futures. So IWM would be the ETF you trade with this. And on here, it looks like a falling wedge breakout. And we even had a reaction off that trend line. So there it is. First reactions up here, a couple more reactions there, one more right here where I'm at. and then we had a reaction there, and then finally broke out impulsively today. So that's a breakout following a divergent low, first divergent low in a while in the small caps, and we're at resistance right now, that 1390 level. If we break that, this would be your next target. Where should the small cap stop? Hard to say. I would say at most a rally up to here. That'd be a pretty big recovery, retracement of the previous move, but it's certainly within the realm of what could be a counter trend bounce if we're going to take another leg higher. However, if we're at where we think we are, I think just as these divergent lows and these breakouts right here start to get some traction, they get sold into. So at some point today, if it looks like the markets just are on track to close today's losses and go positive and everything looks good, and all of a sudden you see the sellers start to step in and take this market down, that's going to tell me that there are still more willing sellers on the sidelines than there are willing buyers. In other words, either longs that want to out of this market or riding the momentum and realize that that's up, or short sellers that feel a little more confident now to step back in and take advantage on bounces back into resistance. So these are the levels I'm watching. That's it. 1390 is resistance, which we just stopped at on RTY. Should that pop and the markets continue higher today, look for 14. I might have to tweak that line. Let me do that for you now. That's a level I had there before, but I need to put it at these reaction highs, and it also comes in to some other reactions along there. So about 14.15, and again, that should cap any breakthrough, break above 1390. And if it doesn't, that starts to look more bullish and bullish if we can continue to run through these resistance levels. All right. And then for those of you in IWM, whether it's the official trade or you're just trading it on your own, we already hit our first target. We hit it last week. I mentioned that. We hit it on Thursday, then again on Friday, then again today. And we're below it now. That's T1 at 136.24. Next target down there, 130.28. Let me show you one other board here and something to watch on IWM. There's a potential trend line, this lowermost trend line. Let me just turn all these lines off and draw it out for you here. So this is one to watch. If IWM moves a little lower, that would probably coincide with us hitting that T2 second target, and if we get a reaction there, that would help to validate the trend line. Otherwise, if we move on down through there, then we don't have an uptrend line because we never had really a third reaction to define it. Okay, now let's talk about the easy money. If the stock market, it's the pullback. If you've been short, it's been profitable last couple days. If you reverse low at the support today in the futures, especially, it's profitable there. But where the easy money to be made is, and as I told you, I do more of a focus on some individual stocks lately. I said that mainly because the stock market was grinding higher and higher and higher, and again I said there's no the risk reward was to me abysmal on the long side. On the broad markets, it still was favorable on the short side. We've got made some money there, but it's still the easy money and the big money's to be made on these individual stocks. So let me start here. These are all, I'm just going to focus on the trade ideas that I've highlighted within the last 2 weeks or so here, and I'm only going to focus on the ones that have anything relevant to report today. In other words, there's others that I reported, but they're either in no man's land between support or resistance. These are the ones that are moving, and we'll start out here with CGA. Just real quick, just to digress for a second, if you want to look up anything that I'm covering, if you're new to the site or even if you've been on the site, go to the home page, click on resources. This is the best way to find analysis on a stock. There is a search function here, and that will usually get you to what you're looking for, but I like to use this select symbol tag. Scroll down under this is the right side of the chart, support center, again located under resources. Go to the bottom of the page, search all front page posts, enter your symbol tag. I'm going to type in CGA, and there it is. Click on that, and it's going to load all posts in chronological order where I've covered CGA, and then you can go into that post, and you can find it in either a video or if I posted any charts. All right, so let's look at that one. I started to update it this morning. I took a screenshot. Here it is right here, and then it prompted me to just do an update. I was going to say get ready, book profits. We're pretty much at that first target. Remember, this is an unofficial trade. So the last video I updated it that in that post I just showed you, added a target here at 406, which is the first target. In other words, that's where I expect a reaction to happen. This was taken this morning around 11:15, a little before I started the video, and we hit that. So there it is, 406. This one was posted pre-breakout with a long entry or buy signal to come on a break above this trend line, which we got. I covered it that day, the day it broke out in the video, and it didn't just gap above. It slowly moved above the trend line, giving you an objective entry, and so far it was good for about 45% gain from there. So again, when I say the easy money, this was a clear, very clear, super well-defined trend line. I was seeing momentum in the ag input stocks, is why I focused on this and some others in that sector. And I know this company, these type of companies, I know you can get 45% in 3 days like you did here, whereas you're not going to take a lifetime to get, or years to get 45% in the stock market, the broad market. So when I say easy money, now it cuts both ways. Low price stocks can certainly go against you, and so the key to trading them, if you're wondering, well, wow, 45%, that sounds compelling, but I could have lost. You don't take a full-size position. You don't put as much into this as you would put into SPY or TLT. You put a smaller position size. That allows you to use wider stops because these low price stocks are volatile. If you run a 2-3% trailing stop on this thing, they're going to clip your stop unless you happen to get in the very right time when it's heading up one day. But you need to give it a little bit wider stop, and again, that smaller position size cuts down your losses if you're allowing a wider stop like 10 or 12%, and it also still puts a lot of money in your pocket if you make 45% in 3 days. Even on a half position size, that's still like making 22% on a regular size trade if you took a 50% or half position size. So either way, it hit that first target. If you're following, you should have taken profits there. It would have been an objective time. It's already given back quite a bit. It's back to 398. If there's continued momentum, now what you look for is one of two things: a pullback to backtest the trend line, that would be an objective entry, or a power back up and a breakout above the 406 level. The next pop above it should stick and run us up here to the next target at 565. Be healthy to see a little consolidation first, or a back test of the trend line. If you go long or add back your position on a pullback to the trend line, a stop a little bit below it, but not too tight, because again, they'll probably run the stops and reverse it up. So up to you. And I just added a support level here. No good for this stock if it goes below the 240 level. That's pretty decent support there. All right, that's CGA. Next one, another ag input stock I covered was Seed, and again, this one was covered pre-breakout. Really liked it. We had this nice divergent low. It had already broken out of this trend line, but I labeled it as highlighted as a buy signal on a break above this trend line here, which we got. So in just a matter of, we highlighted this one back maybe 2 weeks ago. We're up about 90%. Where does it go from here? Hard to say, but the thing is, there's still momentum in the sector, and again, that's why this was highlighted along with other stocks in the sector. Right there, I have resistance about 777, so getting a little frothy. No doubt about that. If you're just going to let it, keep some wide stops and let it run, max target on this one would be right there at 1081 if it gets to that level. This is a pretty significant resistance level, 777. So this may be the end of the run on this one. It all depends really on how much more momentum is left in the sector. I highlight that 777 level because it's this trading range we bounced between for a long time. We had this one little brief break above it, slight pop below it, but other than that, it's pretty well defined. So therefore, any run up towards or near today's highs, if we get it again, would offer an objective entry. And again, sometimes these suckers, these low price stocks and these stocks in this sector, I've seen them run. So there's nothing wrong with just trailing stops up periodically and letting it run and going for the moonshot, trying to hit that 1080-ish target. So there's again another one, quote unquote easy money, or at least easier than trying to extract that anything close to that out of the broad market, because when you trade the S&P 500, you're going long or short. the 500 stocks with the most bullish and bearish companies within the S&P 500 at the same time. That's why your gains and losses are not nearly as much in a ETF that tracks an index as it would be an individual stock. All right, next up was BGG. Last time I highlighted that one was back here in this video just the other day. This was a mid-session analysis last week. At that point, I said BGG, we just hit that 280 target, and I said this is a very objective time to book profits. We were up for a 45% gain at that point. Went on to say, talking about it here in the video around that time, I feel pretty confident that we're much closer to the end of a rally than at any other point, meaning the beginning of the rally or the midpoint of the rally. I was talking about the broad market. So my point was to start, any of these long trades that are extended and hit a target like BGG up 45%, great time to book profits. And you can see, hopefully, if you took it, you did. If not, then you gave back almost all the profits on that one. This thing dropped about 31% from that point, where it was highlighted right there, trading just above that 280 target. So, is it a recycle back in? Maybe. Depends what the broad market does. Again, if the broad market can burn through the recent sell signals that we had last week, get back above those island tops, take back those trend lines, and if it's going to do it, now's the time. We have those bullish divergences on the 60-minute charts. It's not the scenario I favor. I'm going to be clear about that, but I'll say that what I'm a little uncomfortable with is, I haven't wavered on my convictions that this was a bear market rally, and that what I've been saying for weeks here is this has been the biggest disconnect I've ever seen in my life between fundamentals and reality, and where the stock market and individual stocks are trading. Never at any point, other than maybe the dot-com bubble towards the end, have I ever seen stocks going completely in one direction with the economic indicators and the economy going in the other. And so that hasn't changed. But what I don't like is, just since that big drop started, boy, the bears have jumped on board. The media has flipped over, and I don't like this sudden shift in sentiment. Just last week, the day before the drop, I went through all my sentiment and breadth indicators, showing you that we had hit those extremes, especially the put-call ratio, things like that have had very, very high success. They're very rare signals, and when they do, you're usually followed by a big drop in the market. However, what I've seen is a very rapid shift to bearish sentiment, at least by reading the headlines. There's no way to gauge. The sentiment surveys are so dated. I always say that the AAII, American Association of Individual Investors, that's one of the most popular sentiment survey polls. That's flawed. It's also dated. They do that once a week, but it's what people say, what they think the market's going to do. Whereas my favorite sentiment indicators are things like the put-call ratios, because that shows people putting their money where their mouth is. In other words, it's one thing for me to say I'm bearish or bullish, I think the market's going to go here or there. It's a completely other thing if I actually have a heavy short or long bet on the market, and that's what a put-to-call ratio shows you. It tells you where people are putting their money, not just in rhetoric whether they're bullish or bearish. So we hit that, but then we backed off that real quick. So where am I going with it? I wish that it would help to support the near-term bearish case if everybody didn't get so darn bearish over the last couple days. But with that being said, pretty powerful sell signals. I'm just, at the end of the day, if you're trying to figure out what I'm saying, it's just not an all-in short time right now. It's not an all-in long time. It's let the bulls and bears duke it out right here, because we have some cross currents. We still have the market-leading FANG stocks that support, despite the recent sell signals. So I think when the market-leading FANG stocks break, then we have a pretty good chance that we're going to go considerably lower. I'm talking not just another 3%, but probably, with counter trend rallies aside, another 7, 8, 10, and possibly 20, 30% lower over time, or more. That would be the assumption that the bear market rally is over, and this is the start of the next leg down. Plenty of work to be done to firm that up. Let's get back to the trade ideas, and we'll wrap this up. All right, those were a couple of the recently highlighted long trade ideas. Let's just go over some of the recently highlighted short trade ideas. This one, which is actually an official trade, this is Berkshire. We shorted Berkshire back here on this first kickback rally. Got it in short about 195.90, so about 196. It went profitable. It went to break even, then slightly negative from above our entry price, but we rallied right into that 270 or 272 resistance, as I mentioned. This is a weekly chart, and you can see here's an instance where you had what looked like a sure thing bullish crossover on the PPO, right? PPO had turned up, was going right at that signal line, but look at that, flattened out like a pancake. It just hit it, couldn't get through. So that's so far, can't call it a rejection because it could still cross. This would be a rejection, but it certainly checked that, because a lot of traders look at this and try to anticipate that, saying, oh, bullish crossover on the weekly, that's when you want to go long. A lot of times there's, when you get the bullish crossovers on the weekly, there's more upside from there, and you can see it in the arrows. But we didn't get it. I just wanted to point that out. Plus we were rejected, and we weren't just rejected at resistance. Berkshire was rejected impulsively. Big, giant red candle. It's a bearish engulfing, but that bearish engulfing doesn't come at the top, so it doesn't have the same significance. It's not, in other words, it's not a reversal candle. Here's a bearish engulfing right there, and that one had quite a bit of downside. There was another bearish engulfing, but you can see they're relatively common on Berkshire, so I take that all into consideration when looking at a stock. If you see, numerous bullish or bearish chart patterns that just kind of come randomly in that stock and don't really play out for much, just don't put too much of a weighting on it. So anyways, I would just want to say it looks good. We're still very comfortably profitable, but on this one I was swinging for the fences and still am. These are the first and only two targets right now, although additional targets may be added if we get anywhere close to T2 on this one. I may extend some targets on Berkshire. Next one up was Costco, COST. Just update that. Also an official trade, also based on a weekly chart, going for the long shot here. This one I wanted to update because we're profitable. We shorted back here. There's the entry price. I can't even see it here. 301.55. I can't remember exactly when. We've had this one on for over a month now. But what I wanted to point out is we broke this trend line, and I in the previous updates I said that we'd need to take that out to open the door to these at least the first target, if not T2 or T3. So we're below it. You know what? Well, yeah, we're below it. I just zoomed in here. This charting software, like a lot of these, when you zoom in, the trend lines drift a little bit, so I'll have to tighten it up. Comes in right there. There you go. So you can see hitting all these recent candles. We're just a hair below it. That's not an impulsive break. We're also on the 200, but we do see, pretty nice reversal lately in Costco. 294.17 is the support here on the daily chart, and that 200-day moving average. So if we can get a little more downside, great. Otherwise, this one is really testing support right now. Let's just say that. Let's just say we're testing support because we're not comfortably below that trend line. DPZ, also an official trade. We already hit the first target. We hit it right back here shortly after we entered, hit the first target, bounced as expected, and we're starting to move lower, but a little more work needs to be done. Let's just put a little trend line there. And again, if you're in it, the first target, which the actual support level is at 367.89, so I set that first target a little bit below. Let me make sure that's the line there. No, 349.38, excuse me. That makes sense. 349.38. That's still support. So we need to take out 349.38, pretty much that first target level, to open the door up to T2, which is a trend line, and then ultimately T3, which is down at 302.20. So little work to be done. Again, needs to take out that trend line. VZ is also another official trade, also based on the long-term daily chart. I'm sorry, the long-term weekly chart. I think that's based on the weekly, right? Don't we have it here? Where are my targets? I know where they are. They get pushed off to the side sometime. There we go. All right, T1, T2, T3 right there. We entered that at 57.94. Profitable. We went, pretty profitable, hit that support, bounce back to entry, and it keeps stopping there. So again, longer term it still looks good. The whole basis for entering this trade, in fact, I think we entered it last time. I think we entered on a bounce back to this trend line or that resistance level, and we're back there again. We keep getting rejected on this downtrend line, and we need to take out this low, and then of course this low. That would certainly open the door, because that would keep this tell us that we're in a larger downtrend. So far we only have a one low, a lower high, and we haven't even taken out that previous low. So that's what we need to do to open the door to much more downside. What would be bullish? Well, if the stock can pop above 50, we'll call it $59, it's going to take out that previous high and pretty significant resistance. So I may lower the stop on this one. I can just tell you right now, I wouldn't put it right here, but a little bit above that level, about, like I said, 59 and change, ideally on a closing basis. If you're trying to swing and capture the big move in this one, best to use a closing basis instead of an intraday, any intraday move above there. Alright, AMAT, Applied Materials, broke down from the rising wedge. Again, this one was highlighted recently, just like back here. You had a breakdown here, broke down last week. We're still below trend. All your key moving averages are coming into play just below. eBay, also sell signal confirmed with a breakdown there, a couple red candles at support. However, we are back, we have just backfilled this gap right here, big old gap. So pretty much we need to break this level. Solid drop down below 46.70 should open the door to the next targets here on eBay. I don't have this one marked. Let me give you that one in case we do get some downside traction here. And I can tell you right now, that's the one. No, let me just say this. This is the one I'm favoring at this point in time. This is my preferred swing target, especially, again, if we get another sell signal and break 46.71, that would be 41.45. And these are unofficial trades. I cover these in mass as I go through these videos. I can cover a lot more trade ideas, and it just takes too much time to mark up all the levels, put out a post for each one as an official trade. Point being is that I make adjustments to official trades at 41.45. That's the actual support level. So I'd be covering this one at about 41.52, something like that, in case all eyes are looking at that level and they start to step in early. I try not to squeeze every last penny out of a short trade or a long trade. Fiserv, another one highlighted recently before the breakdown. It was highlighted as an objective short on a break below this rising wedge pattern, and so far good for about an 8% drop. Took out that 150-ish support. Has a little reaction here, a little reaction low, that is, but I do favor a move down here to this next target. Again, it's going to depend on what the broad market does. If those 60-minute divergences continue to play out, and so far we've seen a pretty strong reversal off the lows. I'm talking about the futures right there. Look at this. We took out that potential trend line, RTY, everything's moving up pretty impulsively. Like I said, that's going to foil a lot of these short trades. That's why you need to check your bearishness right now. I know how, especially newer traders, how amped up they get after a day like we had last week with the big drop. One day doesn't make a trend. The market was overheated. It was one-sided, and we need just a little more work to firm up the case for a much deeper correction. So I'm going over the trades that stand out, the ones I think will outperform on the long or short side. I started with the longs here, and now we're in the shorts. We have been for a while. I highlighted a few longs. Another one, KLAC, broke down as well, back testing both the trend line and resistance. See, this is an objective level to short right now because you broke down your back testing, but it would certainly help to see the market stall. And right now, there it is. ES is at the next resistance at 30.33. RTY has popped resistance, and then NQ is at resistance or a hair above. So, I will say, again, this is another level they quote unquote should fail. NQ is a hair above that level. So we need to see a reversal here, or if they keep going, they're going to take out these resistance levels, and that opens the door to the next level. And you'll probably see a lot of short covering because I have little doubt that a lot of retail traders jumped in late, probably after the big the big drop we had in the market last week. I imagine there was quite a bit of shorting going on after the big drop. Let's see, one more, Starbucks, two more, Starbucks and Zoom. Starbucks, Posted a objective short here on a pushback to the 82-ish level there last week, and or on a break below the trend line. 2 entries you could have had, and it was good for a drop of about 12% so far. Reversed just shy of my 71.22 target, and again, where it goes, I still favor more downside. Like I said, a lot of that's going to depend on what the broad market does here. So I remain bearish. I think we'll probably see these rallies get faded into soon. And the only other one that I wanted to update that hasn't triggered a sell signal yet is Zoom, ZM. I covered that as a potential short trade last week, but I said we don't have any sell signals at the time. I said we had to break this trend line. Now we're well above that trend line, still in an uptrend, and I have this minor trend line here that I think will do the trick. There's our divergence, or our potential divergence. Let me get rid of this. Alright, here we go. I'm going to give you one more level on Zoom now that I can see some reaction. I see a gap, a reaction high, so here we go. Here is the first target for Zoom. No sell signal yet, but if we can break this, and I would wait for the broad market. This is a momentum stock. Everybody loves Zoom because everybody's been doing the video conferencing with COVID. Now we got another flare up of COVID. So the news is flowing into this one. Momentum traders are here, but again, it's getting a wee bit rich in its valuations. That's an understatement, of course. A little irony there. And when you get what happens in momentum stocks, it's like a game of musical chairs. So music's playing, fine, that's what you want to be in. When the music stops, you got to get out quick. You don't want to be the last one standing without a chair. When Zoom breaks, and I think that'll do the trick, a solid break of this trend line, of course the market should roll over as well. I think it'll be a quick ride down to that 181 level, and that would be from where we're at right now. I'm going to have to go over here to measure. I'm just going to come parallel to that where we're at right now. Measure down. My percentage tool pops up to the left, 22%. So to come down to that 181 level, it intersects the trend line, or it would. It depends if and when we break down, guys. Again, we don't have a breakdown, so no sell signal. We could go higher, higher, higher. The higher we go, that would still be the target anytime soon. So that's about a 22% drop. And again, I think it would happen in a matter of days, possibly even one day. I doubt that. Probably take a couple days to get down there. And that's, again, the beauty. That's why I like shorting stocks. Stocks tend to fall a lot faster than they rise. I mean, this one has had some big ups lately, but again, I'm going to end it here and say that would be, of course, an initial target. And then if the market rolls over and we start to get some additional bearish evidence, particularly on the daily charts, then I'd be looking for a break of this trend line and a longer term short. And how would that look? Something like this. Come down here, hit that first level, bounce, and then work our way down to these additional targets, potentially all the way down to 102. I think there's a lot of hot air in Zoom. I think what they do is not unique. I see commercials on TV for Microsoft advertising their own video conferencing platform, how it's secure, and Microsoft is over $1 trillion market cap company. They are flush with cash. If they want to, the only thing I can see about Zoom is maybe a takeover candidate. Otherwise, if they don't want to pay up for it, Microsoft or anybody else, they want to compete, well, they could come in and really take away a lot of the market share for this one, and you could see a very, very big drop. So I just want to say that for those of you that say, oh, Randy, that's a 55% drop in Zoom, that's never going to happen, it's crazy. That's where, if we're in a bear market, that's where I think this one's eventually headed. Alright, we'll wrap it up here. Long video, but lots of trade ideas and things to watch in the market. So if anything big happens today, I'll get another video out or some charts. Otherwise, those are the things I'm watching. This has been Randy Finney with Right Side of the Chart. Hope you enjoyed it.